This is a preview video. Thanks for joining us at xm.com. I'm Christina Marujos. With me today is our senior investment analyst, Haralambos Pissouros. Haralambos, the Fed still sees 3 rate cuts this year, and markets anticipate the first cut to be delivered in June. Now, could the PCE price index data that is out on Friday perhaps change these projections?
Hello, Christina. Yes, the Fed appeared more dovish than expected last week, with the updated dot plot still pointing to 3/4 point rate cuts for 2024. So the outcome came as a disappointment to those expecting the Fed to signal 2 rate reductions by the end of the year, prompting investors to add back to their rate cut bets. Now, according to Fed Fund Futures, the probability for a first quarter point cut to be delivered in June has risen back to around 80%. Now, for Friday, the forecast is for the core PCE index to have remained unchanged at 2.8% year on year, with such a stickiness supported by the higher than expected CPIs for February. Now, although Powell has already mentioned that the stickiness in recent inflation data is not a reason for the Fed to alter its plans, a higher than expected core PCE rate accompanied by strong income and spending prints could well raise fears of accelerating inflation in the months to come. To be honest, the S&P Global PMIs for March already revealed that selling prices rose at the fastest pace in just under a year. On top of that, both the University of Michigan and New York Fed one-year inflation expectations remained at 3%, suggesting that consumers believe that the Fed's 2% inflation target will not be met even in a year's time. So, with the US economy continuing to perform better than its major peers, data pointing to sticky inflation may indeed slowly start convincing market participants again that the Fed may not need to rush into cutting interest rates in June.
So Haralambos, taking that into account, let's turn to the market reaction. How could we see the dollar perform this week?
The dollar tumbled in the aftermath of the FOMC decision as dollar bulls were disappointed by the fact that the dot plot continued pointing to 3 rate cuts for this year. However, they did not abandon the game, initiating new long positions after the Swiss National Bank surprisingly cut interest rates on Thursday, and as the Bank of England appeared more dovish than expected. Investors are now seeing other central banks turning more dovish, and they are also assigning strong probabilities for all 3 major central banks, the Fed, the ECB, and the Bank of England, to deliver their first 25 basis points rate cut in June. So, if Friday's numbers convince investors that June may not be, after all, the best choice for the Fed, and that US policymakers should wait for a while longer, then the dollar may enjoy more gains and extend the recovery we saw during the end of last week.
Haralambos, thanks so much. This was a preview video. Thank you for watching at xm.com.